This week, Ray Dalio has been sharing his views on various topics related to the global economy, geopolitics, stocks, gold, and the dollar. First, Dalio characterizes the Israel-Hamas conflict as a troubling development, potentially representing a step toward a broader international conflict. He anticipates that both parties involved in the conflict will continue to engage in hostilities until one side clearly prevails or until global superpowers intervene to facilitate peace. He emphasizes that such brutal conflicts are more likely to escalate than de-escalate and raise the risk of a hot world war that could involve major powers. Moreover, Dalio underscores China's ascent as a formidable superpower, pointing out the fundamental differences in governance and values between China and the United States. He highlights that China's Confucian culture places a strong emphasis on harmony, order, and respect for authority, while the U.S. values individualism, freedom, and democracy. Dalio suggests that China exhibits a long-term vision and a strategic plan to achieve its goals. In contrast, he portrays the U.S. as often being short-sighted and reactive to immediate events. China's substantial investments in technology, infrastructure, and education are contrasted with U.S. spending on military, welfare, and debt. He believes that China and the U.S. are engaged in a strategic competition that will significantly influence the future of the world. Key areas of contention include the independence of Taiwan, the global semiconductor supply chain, the battle for chips, and the broader geopolitics of Asia. These issues are delicate and close to red lines, which could lead to conflict if not handled with care. Dalio warns that the ongoing Russia-Ukraine conflict represents a step toward a more extensive international conflict. He anticipates continued brutality until one side decisively prevails or until major world powers intervene to broker peace. These brutal conflicts, he notes, are more likely to escalate than de-escalate and can increase the risk of a hot world war that includes major powers. In his assessment, Russia is considered a rival superpower to the U.S., marked by differing governance systems and values. Russia is depicted as having a strongman culture that emphasizes power, loyalty, and nationalism, while the U.S. upholds a liberal culture that emphasizes individualism, freedom, and democracy. Dalio points out Russia's significant influence in the global energy market, with a strategic advantage in supplying natural gas to Europe. He warns that Russia could employ this energy leverage to influence European politics and security, particularly in light of projects like the Nord Stream 2 pipeline. Dalio has expressed apprehensions about the status of the U.S. dollar as the world's primary reserve currency. He believes that the extensive fiscal stimulus measures undertaken by the Federal Reserve may have eroded the dollar's strength. Furthermore, he suggests that other nations are losing faith in U.S. leadership and are exploring alternatives to the dollar. The U.S. use of sanctions and tariffs as tools of foreign policy is seen as a double-edged sword, as it can strain international relations. Dalio predicts the likelihood of significant political turmoil in the United States over the coming year. This turmoil is expected to stem from economic challenges, mounting debt issues, and geopolitical tensions with countries like China and Russia. He expresses concern over the internal divisions and perceived decline of the United States, as well as the potential threats to its democratic institutions. Dalio suggests that investors should consider favoring stocks and gold over traditional investment options like bonds and cash. This recommendation is based on the observation that bonds and cash currently offer low or even negative returns, a consequence of central banks' monetary policies that involve printing more money to stimulate economies. He highlights gold as an attractive investment due to its role as a hedge against both inflation and currency devaluation. Gold tends to perform well when there's a loss of trust in traditional currencies, particularly the U.S. dollar. Dalio's recommendation aligns with the historical role of gold as a store of value during times of economic uncertainty. Dalio provides a list of his top stock and ETF picks, which include well-established companies like Procter & Gamble, Johnson & Johnson, Coca-Cola, PepsiCo, Costco Wholesale, and McDonald's. These selections reflect his preference for large-capped, stable, and diversified companies, which are typically better equipped to weather economic shocks and geopolitical uncertainties. Dalio expresses optimism about certain Chinese stocks, such as PDD Holdings and Alibaba Group Holding. His bullish stance on Chinese investments is driven by China's growing prominence as a rival superpower with a distinct governance system and economic advantages. The substantial domestic market and China's technological prowess in various sectors make it an appealing investment destination. Dalio advocates for a more substantial allocation towards gold in investment portfolios, particularly in the portion designed to protect wealth. He has consistently recommended that investors hold between 5% and 10% of their portfolios in gold. This strategy is rooted in the belief that gold stands to benefit significantly from the decline of the US dollar, and some experts predict that the price of gold may reach levels of $2,500 to $3,000 in the near term. Ray Dalio asserts that the world is grappling with a looming debt crisis, a situation where the debt levels of many countries have become unsustainable. This could necessitate a significant restructuring of the global financial system. In response, countries may have to choose between defaulting on their debts or employing inflationary measures to alleviate the burden. The creation of substantial sums of money by central banks to stimulate economies has contributed to asset bubbles and income inequality, exacerbating these economic challenges. Dalio underscores a significant shift in global power dynamics, with the center of influence transitioning from Western nations, particularly the United States, to the East and notably China. He posits that China is on the ascent as a rival superpower with its distinct system of governance and values. Simultaneously, he perceives the United States to be grappling with a decline in influence, facing internal divisions, and encountering threats to its democratic institutions. This shifting balance of power between these two countries will play a pivotal role in shaping the future world order. Dalio acknowledges that the global economy faces an imminent climate change challenge that necessitates coordinated international action. He emphasizes the seriousness of the threat, pointing out that climate change can adversely affect the environment, public health, and global security. To mitigate these risks, Dalio suggests that the world must commit to greater investments in green technologies and the reduction of carbon emissions. Addressing climate change not only helps safeguard the planet, but also opens up avenues for innovation and economic growth. In conclusion, Ray Dalio's insights on the global economy, geopolitics, and investment strategies provide a thought-provoking perspective on the current state of the world. He highlights the complex challenges facing us, including economic debt crisis, shifting global power dynamics, climate change, and geopolitical tensions. His investment advice, which emphasizes gold, stocks, and certain Chinese investments, reflects his response to these challenges. It's important to note that these views represent one perspective, and the world's future remains uncertain. To navigate these uncertain times, it's essential to stay informed, diversify investments, and adapt to changing circumstances. Thank you for watching, and please feel free to comment below with your thoughts or questions on these topics or any other subjects you'd like to explore.